In today's video, I'll be introducing a brand new indicator on TradingView that helps spot trend changes, as well as overbought and oversold conditions in the market. Kind of add this indicator to your chart. You just need to head over to TradingView, open up the indicator search tab, and type in linear regression oscillator. You'll want to choose the one created by ChartPrime. Since this is just an indicator, not a complete strategy, you can apply it to any trading security and use it in any time frame. There are no restrictions there. Let's now dive into what this indicator is all about. The linear regression oscillator is a custom trading tool designed to give insights into potential mean reversion and trend changes in the market. It's meant to help you identify overall market trends and find overbought or oversold levels. As you can see, it consists of an oscillator that shifts between teal and blue to reflect market trend direction and strength. The oscillator moves around a zero line in the center. When it's above zero, it signals a bullish trend. When it dips below zero, it indicates a bearish trend. You'll notice there are overbought and oversold levels as well, marked in teal at the top and blue at the bottom. If the oscillator moves into the upper range, it's suggesting the market could be overbought, and when it dips into the lower range, the market might be oversold. Additionally, this indicator shows trend following signals directly on the main chart. You'll see teal-colored upward arrows indicating the start of a bullish trend and blue-colored downward arrows marking the start of a bearish trend. These arrows appear as the oscillator changes from blue to teal or vice versa. There are also mean reversion signals that appear when the oscillator hits the overbought or oversold zones. If you're looking to make mean reversion trades, these are the signals you'll want to focus on. Now let's talk about trading with this indicator. Before that, let's check out the settings. When you open up the input tab, you'll find the length setting, which defaults to 20. We'll stick with this value since it strikes a balance between responsiveness and smoothing. A longer length smooths the oscillator but might introduce lag, while a shorter length makes it more reactive but noisier. You can also adjust the upper and lower thresholds, which represent overbought and oversold levels. For now, we'll keep these at the default. There's also an option to color your candles for better trend visualization, so let's enable that. Once you're set, hit OK. All right, let's discuss how to use this indicator for trading. But first, I want to give a shout out to my amazing trading family at Bybit. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy 0 fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success. Now back to trading with the indicator. One way to use it is as a mean reversion tool. You'll identify points where the market may be overbought or oversold, combine that with some price action techniques, and look for trend reversals when prices are extended. Let me show you an example in this case. We had a minor bullish trend with prices climbing, and the oscillator signaled an overbought market. Price retraced slightly, then went bullish again. A double top pattern formed here with the second high lower than the first. This lower high and double top, combined with the oscillator's overbought signals, increases the odds of a downturn. You take a short trade here, aiming for the swing low as your target. In this example, we had a 2.5 to 1 risk-reward ratio, making it a successful trade. For long trades, it's the same concept but reversed. The second trading method uses this indicator in a trend following strategy. Let me show you how it works to take a long trade. You need to see a shift from bearish to bullish indicated by the oscillator turning teal. You'll also notice a teal upward arrow on the chart and your candles turning teal. The key here is to watch the invalidation level. The price should not touch it, even slightly. Wait for the market to confirm a bullish trend with the candles turning blue, and then back to teal without hitting the invalidation line. If all conditions are met, take a long trade, set your stop loss at the invalidation level, and aim for a 1.5 risk-reward ratio. This approach helps confirm that the trend is strong enough to push prices up. For short trades, you do the opposite. Start with a bearish trend indicated by blue candles and the blue oscillator. Again, keep an eye on the invalidation level. If the trend shifts to bullish without touching the invalidation line, wait for it to turn bearish again and confirm with a blue downward arrow. Take your short trade once these conditions are met. While this indicator isn't a complete strategy, you can use it alongside backtesting to refine your trading. Consider pairing it with another chart prime indicator called Market Oracle Pro for an added boost. It gives normal and strong buy and sell signals. When the Market Oracle strong buy signal aligns with the linear regression oscillator's bullish trend indication, you have a high probability setup. For example, here we have a bullish trend marked by a teal arrow, and the Market Oracle prints a strong buy signal in the same candle. This alignment often leads to profitable trades. If you want to get access to the Market Oracle Pro, there's a link in the video description where you can try it free for 7 days with a money-back guarantee. Plus, there's a 30% discount if you use that link. That's it for this video. I hope you found this content valuable. If you did, please give it a thumbs up and consider subscribing for more updates. Thanks for watching, and I'll catch you in the next one.